You're probably in crypto too, because you know that this is the greatest place to make massive wealth in the shortest amount of time in history. If you're investing well, you can also lose everything. Now, after 18 years of background in investing, I found crypto in 2017. And during the bear market of 2018 through 2020, I invested every penny I could, and the results were amazing. But I found that there was a sweet spot, a part of my portfolio that outperformed everything else. And that was projects that were 1 to 5 years old, whose token had been punished by the bear market and token investing pressures, but had a solid team and they had a really good narrative or idea that would move blockchain forward. Those were the part of my portfolio that outperformed everything else. I've made that the focus of my portfolio and what I talk about on this channel, this bear market. And we're in the early bull market. It's getting exciting. Today, we're joined by one of my favorite projects that falls right into that, DeFinity. And we are also joined by the real Randy Chavez for a joint interview with them. Welcome to the Crypto Rain channel and our family. If you're looking to become a savage seasoned crypto investor and become like a Navy SEAL of crypto investing, you're in exactly the right place. If you haven't already, do make it rain on that like button, strap in for the show, and help me welcome my co-host, the real Randy Chavez. What's going on, my man?
I'm doing well. I'm just hanging out with the Dashi over there. I want to say hello to Dashi, and we are ready to going over everyone's questions, writing our list, checking it twice, and we're ready to get this right. Hopefully, we can get the team on for a little while to answer everything. You ready?
You fantastic. Let's do it. I know Chris is here and Manu isn't here yet, but Chris will tell you why. Chris, what's going on? Thank you for joining us.
Good to see you, gentlemen. Apologies that Manu is sort of running late or potentially slightly tied up, but it's very much a first world problem, as they say, or a high quality problem. So in the run up to Christmas, we've seen a lot of clients in our small cap side that we've been talking about for a while, that's up and running and live, have been going absolutely nuts with everything that's happening in the market. And there are trades coming in thick and fast. So Manu is hopefully going to join us sort of later on, but trading and sorting out the clients and generating the revenues is obviously the first priority for him today, and for all of us in the run up to Christmas. So he's just sent me a message saying he'll join as soon as he can, but it's a good problem, a good problem that he's not here. And I suppose that sort of brings me on to the intro to sort of DeFinity Markets for those people that are joining for the first time or may not be aware.
Yeah. For people that don't know what DeFinity Markets is, what is it?
Yeah. So DeFinity Markets is an institutional venue for digital asset, and at the moment that's predominantly crypto exchange. So it is purely for financial institutions. It is a secondary market venue. So what do we mean by that? It means we are addressing all the centralization problems that have happened with most of the participants in the crypto world. So we're not custodians. We don't have a market making side, so we are independent. We deal with a number of liquidity providers, so we can provide that best price concept that financial institutions and wholesale markets are used to seeing. And really, we set this up to try and create a platform where financial institutions could enter in size into crypto by addressing the problems that exist in the current crypto market and the participants in it that are keeping some of the big global FIs out. And we know they're desperate to get in. We've been talking to them for a while. Through our FX division, we have been trading with a lot of the world's top 40, 50 banks, hedge funds, and asset managers for over half a decade. And really, their feedback to us was, this blockchain thing is really exciting and interesting. How do we get into it in a way that legally and from a client responsibility perspective, we're able to do so. So that is, what DeFinity is in a nutshell. We've been building out the platform over the course of the last couple of years. We've had some people on the journey with us, and some of you may be kind of new to this. And we've created an ecosystem that basically addresses all the requirements of a financial institution to come in to trade either crypto or future-proofing other digital assets as a secondary marketplace. At the moment,
I have a question with that, Chris. So
Yeah.
say an institution wants to buy crypto, why don't they just, they have much more money than an average person. Why don't they just send 10 or $100 million into a company like Coinbase and then buy it there?
Yeah. So a very good question. And this is a bit a lot of people hadn't really been made aware of to date. So financial institutions, particularly when they're looking after other people's money, need to deal with trading counterparties that have a number of key criteria. The first one is an investment credit rating. So there is no crypto institution in the world at the moment that has an investment credit rating. Now, we've addressed this problem by partnering with a tier 1 European investment bank to credit intermediate all transactions on our institutional platform. So that basically means that people transacting on the platform are not taking us as a counterparty risk. They have collateralized investment bank credit rating, which ticks that box, which is a massive box. I mean, that's hugely, hugely important. So in terms of looking after other people's money, they have to be able to say that we're only putting it in the safest places, particularly after the global financial crisis. So there is the second part is the regulation that exists, and we are regulated out of Jersey, which is near shore to the UK, and obviously has AML equivalents across Europe and with the US. So it ticks that box of having the regulatory badge. A lot of the regulation that exists at the moment is not fit for purpose in terms of some of the jurisdictions that financial institutions can actually trade against. So if you were to say, oh, we have regulation out of the Caymans or something, for example, and that's where we're based, or we're based in Latvia, a financial institution such as a large hedge fund or asset manager would not be able to face you just because the regulatory requirements and the hurdles are not acceptable. So we took time choosing our regulatory home, recognizing that the US and the UK don't yet have full wholesale market crypto regulation enabled. So they're not really ready to move. But from our point of view, we found that by going to Jersey and by speaking to the investment bank that we're working with, that Jersey would be an acceptable jurisdiction. So that's regulation. And that's also the credit quality of the counterparty. The next thing financial institutions have to do is they have to show to their regulators and to their investors that they're getting best execution or a good price. Now, if I just go to you and say, hey, Randy, can you sell me something? You can make up a price. You can sell me for whatever you want. Right? I don't know if that's a good price. So I need multiple participants. So therefore I have to go, hey, we've got Randy, and now I've got crypto on the line. So you guys both give me a price, and independently I can take the best price and buy the asset at that price. So again, because we have multiple liquidity providers that we bring onto our platform, an institution can come to us and look across a huge swathe of the market and therefore demonstrate to the people that govern them and to their investors that actually they're getting a good price for what they're buying. The other point is we're not a market maker, so we don't have our own book. So we don't have a bunch of traders sitting in the back room like some of the big exchanges that are actually trading in the assets themselves. So again, we're truly independent. So when people come to us, yeah, I mean, we know that theoretically in investment banks there are Chinese walls and so on that are regulated and governed, but actually the best way to make sure that you're getting a true and a fair price and you're not being, there's not an information advantage that the institution you're dealing with has over you from a trading point of view, the best way to achieve that is not to have a market maker sitting in the place that you're trading. So that's what we provide. We're only showing other people's prices. And again, we are not a custodian. So if you look at it from that point of view, you can choose your own regulated custodian. So you can go to one of the big global regulated custodians or even self-custody, and then the assets only come through us for the point of settlement. So in a way, we've taken the infrastructure that exists for wholesale markets and traditional assets, and we stripped out the bits that you don't need for crypto because it's a different behavior type of asset. So we've taken things like the clearinghouse concept and so on away. You don't need that with crypto because it's a bearer instrument. And we built a middle ground that works for all the requirements of traditional financial institutions and wholesale markets, but with all the benefits of blockchain and digital assets. So we're reasonably unique in that, as in we are no longer providing a single point of failure that you might get, for example, with a Binance or with a Coinbase or anybody else, where you have to put your assets in, they're making a price to you, it's only their price, so there's an inherent conflict of interest, and they don't have the right regulation or credit counterparty risk for you to be able to face them in any size. So
let me just step back. It's like solving a couple things, like institutions aren't legally allowed to send their money to a company like Binance or Coinbase because they have to do it with a credit approved company like a bank. And for reasons like, imagine if they had sent 100 million to FTX and then FTX goes insolvent because they were secretly sending some of that money to Alameda Research and then investing it, and then were losing it, and then didn't have the assets they were supposed to. So, as an institution, they have fiduciary responsibilities to show that they're acting in a smart way. So they can essentially legally send money to AA or AAA rated bank or some other institution that has a credit rating. And therefore they meet that we can show that we're being responsible with those funds and not sending them just to a company like Coinbase or FTX or something. If they go insolvent, they might not even get those assets back. Then they can then trade against it. So DeFinity saw this problem and said, well, why don't we set up trading and allow people to custody it with all these different banks or institutions they're comfortable with. They can send their money over there, or perhaps in many cases, they already have their money over there with those institutions, and then they can trade against them. Secondly, how do we, instead of having our own market maker or internal that might actually not be giving them the best price, why don't we set up that multiple sellers or buyers can be buying there, and so they can pick from those to make the best price? Now, question, how much of that is automated and how much of that is somebody has to be sitting there helping bring those parties together? Like, can they log into a portal and see what the prices are? Or do they have to like call up and say, hey, I want to buy $5 million of Bitcoin today?
Yep. Great question. So we have both a GUI for our institutional customers, so they can access an online portal, and our liquidity providers stream prices into that. So there's live streaming prices, which are executable. We also have APIs. So for those institutions, of which there are many, that have their own trading systems and they want to use their own front end, they can plumb into us through an API, which for people who haven't come across it before, is basically a socket. Now, we actually use Fix API, which is quite an old school banking wholesale markets type API. And the reason we do is because it's a lot more resilient than some of the more all singing, all dancing APIs that exist nowadays. So you might say, oh, well, from a technology point of view, that's kind of old tech. It is, but banks like it because it's tried and tested and they know it's not going to stop working at a critical moment. So we provide both API access, we provide GUI access, and of course, what we learned as we were building this out is some of the bigger positions and some of our liquidity providers, it is important if you have big positions not to move markets too much. So therefore, we can also deliver solutions through our liquidity providers that are that are worked trades or orders, shall we say. So in a voice channel, we can help people if they have significant positions to either get in or get out of, to do it with minimum market impact. So there are kind of algo trades, etc., that people can do. We can do risk transfer trades. So again, it's bringing some of the trading disciplines that asset managers are used to, that don't really exist in an institutional basis in crypto, and kind of bringing them to the crypto asset class for those institutions.
Now, question, if they have access to portals and the trading is somewhat automated that way, what is Manu so busy doing this morning? Is it onboarding new clients?
So there's a combination. I mean, yes, we're sort of onboarding clients, and a lot of that we've been very heavily involved with a number of clients on the small cap side in the sandbox. So they're in the test environment. We have tested the production environment again for our small cap business. So for people who've sort of come on the journey with us, so yes, he's actually helping facilitate trades, so he is actually P&L generating, which is a good thing. For people who've sort of been following us a little bit in the journey, probably earlier this year or tail end of last year, we started trading what we call our proof of concept business, because we were aware that we needed to prove, for working with the banks and the institutions, we needed to prove that there was a robust, and for the regulator, a robust, governed, functional trading system and platform that would be acceptable and that they could see was demonstrably working. So we started what we called our proof of concept with smaller institutions. We subsequently rebranded that business as small cap. The reason is our run rate is now on the good side of $7 million a year in terms of revenue. So we've grown since we did those first few test trades to sort of, for that first month of December, really last year, we've grown about 200x in terms of revenue. So the reason we're keeping that business going is what we call our small cap business. Is it takes so many businesses so long to cross that Rubicon of the $2 million or $3 million kind of run rate, let alone actual revenue achieved in a year. It felt like it would be crazy to take that proof of concept business and switch it off while we were turning on the institutional side. So what we've really done is we've created a sort of small micro business as such on our small cap business. And that is what is keeping us very busy at the moment, because alongside that, we're also going through the final stages of the plumbing and working very closely on the regulatory side to demonstrate the proof of concept for the investment banking side. And that's the bit that we're expecting to launch in Q1. So legals and so on are all agreed. We have our regulation already, has been proven. So we're just going through the systems and processes and the checking with the regulator and their representatives for that to go live. So we'll actually end up with sort of two businesses rather than the one we started probably about 18 months ago envisaging.
Yeah, that's amazing. 200x growth in revenue since the early stage. That's massive. You know, for the audience, you might not know that most crypto companies aren't even positive in revenue yet. They don't even have revenues. They're at a stage that they're like, one day we hope to have revenues, and there aren't revenues coming in. So I do like to look for projects that have actual revenues coming in. There just aren't a lot of them. Well, so that brings me to the point, like DeFinity Markets has a token, DEFX token. What is the DEFX token?
Yeah. So in short, one of the ways we were able to do what we did in creating the ecosystem and creating an operating model that worked for wholesale markets was at the outset of our journey to, I suppose I like to say, kind of have a period of being crypto native. You know, we thought we can't really. This is a different asset class. It operates differently. The behaviors of blockchain, of Bitcoin, of Ethereum, proof of stake, proof of work. These are all sort of new concepts. How can we create a trading venue for institutions in size if we don't really understand how the nuts and bolts work to an extent ourselves? You know, unless we've actually. So DEFX was really the start of our journey to understand hands-on crypto. So really that was where we began. But unlike a lot of other projects at the time, we were aware that the ecosystem we were creating in the trading venue with financial institutions would take a period of time for potential adoption, and a lot of large global banks, etc., may never cross the Rubicon of getting really into the altcoin. So they may well stay right at the top end of crypto. So rather than making DEFX have I suppose, an operating requirement for the platform, we also recognized that the platform that we needed would be part on-chain, part off-chain, because financial institutions, particularly hedge funds, often trade at very low latency, and therefore going on-chain would potentially cause a problem to that working efficiently. So the DEFX token, we decided the best utility and the best use for that, apart from going through the sort of crypto journey of learning about how bridges operate, the different layer ones, creating wrap tokens, and looking at things like sort of farming, staking, etc. The other thing that we recognized was if we can create a tokenomics for the token that is functionally independent of the trading of the platform, but actually provides a value and a benefit to people trading on the platform, then we've created an independent demand requirement that doesn't need to be part of the functional operation. And what the token does, and primarily, is give benefits and discounts and economic benefit to people trading on the institutional platform. So what do I mean by that? If you're a hedge fund and you hold a certain amount of the tokens, then you will get a discount to your trading fees across our platform. So we've created a need for people to go out from an institutional perspective and actually buy the token. If you are using the artificial intelligence, machine learning, anomaly detector that some of you may have come across, we may have talked about in the past, that is part of the risk management requirement that financial institutions needed to get them more comfortable with entering into a new asset class such as crypto that's ultra high volatility, where their old risk engines possibly didn't work, then by paying fees, you will get a discount to the fees, and a proportion of those fees paid in the token will actually be burnt. So again, it remains a utility. So it's not a case of a management team going out and walking the tightrope of the regulatory gray area about where buying and burning, where you're driving the buy and burn rather than actually the users of the token are buying it. So is it a utility token or a security token? In this instance, we've had opinions and we've had proof cases in the US as well, that actually people buying something understand that some of the tokens that they're using to pay for it will be burnt. So therefore it's out of our hands entirely, and it's purely in the hands of the people purchasing the tokens. So that maintains a utility classification, which is critically important for us, so we don't get regulated or classified as a security. So that's another sort of main use part. Being part of the token, having a listing on MEXC, and having worked with some of the SECs as well as the DEXs, we also worked with our AI house to create a market maker. So any project going on to a SEX wanting to have a market maker, we've created an automated market maker that operates on the SEXs. Now we use it for ourselves, but we're also talking to a number of our key partners who are launching tokens and one or two other larger projects about using our market maker on the SEXs because of the transparency and the management control it gives the projects over their token. And again, if you pay in DEFX, a proportion of those get burnt and you get a discount to the fees for accessing the market maker. So we've created as a core function of technology and trading venue that we actually own and operate, a utility for institutions and a need for institutions to purchase the token to get a discount to fees and to get a discount to access to the various pieces of technology and the various tools we've provided. So we've sort of built in that demand driver as well. There are other various elements too that we can, that we've kind of layered in. I'm sure there's been some discussion in previous AMAs about the gaming repo project. So the crypto repo project, where people can access through a repo agreement gaming chips by repoing. So that's kind of a repurchase, which large financial institutions use. So people can enter a repurchase agreement with us, whereby effectively they sell their Bitcoin, and we're talking ultra high net worths here, but we are talking regulated land-based casinos. They can
actually clarify for this, because the repurchasing, like that word isn't a term I use every day. If I'm correct on this, essentially because DeFinity is helping institutions get into crypto, my understanding is like months and months and months ago, someone said, well, here's a problem we have. We're casino, and all the, a lot of gamblers, high net worth individuals come in and they say, hey, can we use Bitcoin to get some chips? And our answer has always had to be no, but we don't want our answer to have to be no, because we're missing out on a lot of business for that. Can you guys help us? And you're like, maybe, let's look into it. So that was the problem that needed to be solved. Looks like you found a way.
It was funnily enough, it was a parallel track as well. So it was exactly this problem and another problem where certain large sort of exchange product providers also that had supplies of crypto were wanting to enter in a repo, and there were financial institutions that were looking for a better yield. So a repo agreement really is, I sell you something, but with the right to buy it back, but pay you interest for the period. And that's effectively what we've created. So regulated casinos, and the first test case is already gone through 2 jurisdictions in the US and is waiting for the sign off from the regulator for the crypto, for the gaming side. And again, this could be massive. So we're working with service providers to these casinos that cover 85% of the land-based casinos in the world, particularly including the US. So again, this is massive. It is only for ultra high net worth. So this isn't necessarily about your average person in the street sort of coming in with a fraction of a Bitcoin, wanting to kind of repo that to access gaming chips. But this is for people who the minimum size is really, I think we set even the test hurdle at about $500,000. So we're talking about people who are ultra high net worth, and therefore they sort of pass that professional investor type. They have the sophistication, pass all the sophistication tests and the disposable asset test to be able to enter into this transaction. But again, the returns are spectacular. The fees for these short-term transactions are, percentage points, not basis points. So even for the 24-hour facility, the fees are percentage points. But people who hold a certain number of our token, and we're just working through the way to make it very regulatory friendly, I guess. So we've not pushed it too hard now while we're waiting for the core premise to get signed off by the regulator. But we are looking at making sure that people who want to enter into this get the opportunity to get a discount to the fees that they pay for entering into the transaction, again, by purchasing the tokens. So again, it's another new set of customers, ultra high net worth, who are using a independent proposition that we support as part of the operating function, who get a discount for the services that they're buying by holding the tokens, or potentially even by paying in the tokens. So again, we're creating a new buy side for the token that is completely, is ultra high net worth, is sort of institutional in approach, is big ticket. So I think
is exceptional. Full disclosure to the audience out there, I'm a huge holder in DeFinity. So is Randy. So are a bunch of our friends, massive holders. They're also a strategic partner to this channel and also Randy's channel. And so, like, we're huge believers in DeFinity. I think you're starting to see why. I've gone so big into it personally, because I'm an investor myself, and hearing these things, I invested before the whole gambling side came about. And when that did, I was like, oh my gosh. But when you have the right team offering really good solutions that are very value driven, sometimes other opportunities approach it, because there's a lot of money wanting to flow into crypto and a lot of problems that need to be solved in crypto. And, you know, since I first talked to Manu a couple of years ago, I was like, I really like this guy. And I find that the right people doing good solutions, a lot of times, a lot of opportunities gravitate towards them. And, you know, what an amazing additional business to fall into. I mean, a crypto business that did that alone could draw a lot of attention, but the combination of that's just a side thing to the bigger thing that you're doing. I love what's going on in DeFinity. Randy, I've been talking a lot. What kind of questions? What do you have for Chris while we have him here?
Yeah, sure. Thanks for coming today. There's a bunch. I would say in the last couple of AMAs that we've done, you had very exciting news saying like, hey, we have all these institutions that are going to need to buy if they want these discounts for either the anomaly detector, discounts doing other stuff. But I don't know if there's been confirmation on if any have bought and when the timelines on when you might be rolling that out. And speaking of timelines, we've had a ton of revenue, like you said, for DeFinity. You had like a 200x for DMA links, but it's not public on what those numbers are. I think it would be really helpful, even if the team doesn't do it, because I know you guys are insanely busy, to get like people like me and Rain, just the content creators for DeFinity, to kind of get the word out there. Hey, we're not just making like a couple $1,000s a month in gross or nets, we're making X amount. So the timelines on just when those banking institutions would be able to go in and actually buy, and then the timelines for when some of these numbers will be public as far as revenues.
Yeah, no, certainly. So we obviously have a slight duty of care, and this has always been the problem since we started the project. You know, when we started a number of years ago, we actually published some of the foreign exchange, some of the anonymized foreign exchange flows that were happening in our existing FX business through kind of a blockchain explorer, before we recognized that blockchain was just moving too slowly in terms of the latency in the system to be able to make it financial institution worthy. But one of the things we've always sort of wrestled with is the secrecy inherently that hedge funds and asset managers like to sort of put on their business. But also, just as we were trying to gain market share and traction, because we, you know, people that know us, we've not had the $100 billion check or whatever from the global VC, etc. We're not a Sequoia, an AZ16, you know, big ticket. You know, we've built this from the ground up with our own sort of hands and bleeding nails at many times. So we've always been slightly careful not to make it too open what our operating model was and what the revenues were, and too much of a target until we got well established. And I think we're now just crossing that Rubicon. You know, when the institutions are live and trading, then, you know, on the big side and the bit we're targeting for Q1, then I think at that point we can start to open up a little bit, because the time it would take anyone, no matter how much money they've got, to try and catch up to what we have would still mean that we'd have a great lead. And that's something we want to do. So we've always been a little bit coy about saying too much too openly, in case somebody with lots more people and lots more money kind of came along and threw it at it, basically tried to replicate the idea. But that said, I think we're sort of crossing that Rubicon. So from our point of view, starting to share with people what we're doing, whether we start creating an index or something, rather than disclose anything that the clients get nervous about us being too open. That might be a way to do it. So we can just say, well, listen, let's assume that this is day 0. If we then look at, you know, day 30, where do we get to from day 0? Then if we look at day 60, where do we get to from day 0? So much the same way as you almost see with inflation. You know, you benchmark it against a base point and then just track it over time. So I think that would be a great way to do it, and something that we'd be sort of happy to sort of start sharing a little bit more of, and really getting that support in terms of the things like the market maker and the anomaly detector. One of the things we brought with the market making side is very much that we have created something that is transparent, where we can sit down with project teams, with management teams, and say, okay, we don't want to do some complicated loan process where you lend us tokens at a price and then we go away and use those to market make, and that we might make money, but you don't know. We've always been of the view that some of the practices we saw, particularly through our own experience over the last few years, have been slightly opaque and a bit one-sided in terms of the people that are meant to be helping a lot of these projects and tokens. So what we've created is very open and transparent, and the feedback we've had from the people we've spoken to, again, is it's very open and transparent. So as these projects go live, we won't be looking to sit in the background and do market making quietly in the hope that nobody notices where we're making a profit. We very much will be going forwards with the projects to say, look, we're bringing market making back to the project teams, back to the people who run and drive these tokens, rather than just look at profiteering for our own book. So I think we'll be able to find lots of ways to bring these live bits of business out to the front through great channels and through great guys like yourselves, because that's also been one of the other things you can see by Manu, and the fact that he's more than 5 minutes late today because of sort of trading, etc. We're not a big team yet. We are going to grow, but we're not a big team yet. And therefore, the more people that we've got that can help share our message and share what we have, then the better that is for the token and the community to kind of grow it and sort of make it real for people. So,
and as far as getting the institutions and buying when that rolls out, is there like, hey, we really want it done by the end of Q2 of 2025, or is it just going to be, hey, whenever they're ready to buy, they're ready to buy, and there's no set timeline?
I think we've been looking at, so with our small cap, with the small cap business going on to the GUI now, with people in the sandbox and testing that, then originally it was always going to be the big financial institutions when they came into the regulated environment. That was the primary, the primary utility. That was going to be the big. I'm very keen that actually we find ways of lacing this into the small cap business, the smaller side, and actually starting to get that side going now. So we've got people who are live and testing on the platform. We know the platform is in production. So really, it's just a case of getting even these smaller institutions over into the production side. And then, I'm keen that we start to try and create the same sort of utility, but on a smaller scale for the small cap business, so we can accelerate that. Because I'm also very aware that with all these great things going on, we're also entering a period where, there's a bit of altcoin season starting to come up. We've seen the ATHs, etc., for Bitcoin. So although in a funny way, long term, we have created the demand drivers for people to buy the token. So also to be very, very aware of what's going on in the market, that those people buying the token mathematically will push up the price. But to miss the opportunity of altcoin season by getting there too late, I think wouldn't be fair to us as a token. So we're very keen to try and bring as much of this stuff forward as we can, so that we can actually create the real drive and initial steps of growth while we're getting into altcoin season. And then what comes behind that is just sort of almost like the insurance contract. It's the backup. It's the big ticket. It takes slightly longer, but it's kind of your guarantee. If we can drag the smaller stuff forward as well and just get the ball rolling, then I think that would be great. And we would love that to sort of thank everybody for their patience and support and sort of working with us.
So something I should have been clear about in the Telegram chat before this was, obviously, if I ask you a specific question about a token price or about essentially just trying to push that, you can't answer because that's forward-looking statement. You don't want to really put yourself in any hot water with the SEC. So I just wanted to go and explain that just here for the Telegram chat. But there is a slight liquidity issue. I've had a couple of friends that I've gone over and said like, hey, when you go and buy, be advised you can only buy like 2K, maybe sometimes 3K at a time. If somebody sells, you can buy into that. Obviously, you have PancakeSwap, we have Uniswap, and we had a MEXC listing earlier this year. But still, for that particular liquidity issue, you can't just buy 100K at once. You can't even buy, a tenth of that at once without really pushing up the price. So the question is, do you guys have any plans to get any stronger liquidity for the token anytime soon?
Yes, I think that's one of the things that we are looking at and we want to address. So, one of the questions we often get is, okay, you guys are generating revenue. Well, use a big chunk of that revenue and put it into liquidity. But our first start point has always been kind of absent the big strategic investment. Our first start point has always been to try and build operationally and scalably as strong a business as we can, because that fundamentally is what in the medium term and the long term is going to support the price and the buying. Actually having a bigger venue, having more customers on board, having a better, having the technology, the regulation, all these things properly invested in. So the more money we can deploy into those to scale up the business, then the better that will be for the token in the medium term. But short term, I absolutely get it from the token point of view. If we can kind of increase liquidity in the short term, then it allows some of these big, because we talked about ultra high net worths, and you said people that you've very kindly spoken to about it. With the crypto repo side in the gaming, for example, if we're putting the token in front of people who are going into a casino and they're putting 2 million of Bitcoin down, and they're using those chips and potentially walking away with significantly less than they started the process with, generally being the way casinos often work, then we've got to be aware that 6 figures to them is where they get interested. So buying $5,000 of something, $5,000 a bar bill, so probably not even a bar bill for some of them. So again, we're looking at, without deploying capital or redirecting capital from growing the business, which is what everybody wants, how do we resolve the liquidity issue? And we've got a couple of things that we are working on, because again, it feels like the time is right now with what's happening in the crypto markets, and also with the imminency of the utility from the small cap side going live, from the market making side going live, from the anomaly detector, all these things starting to come in. Again, getting these people to buy will create more flow and more traction across the token, but it needs liquidity. Otherwise, we're going to be in for a very wild ride with a thin liquidity pool.
Yeah. On that vein, Chris Ashbay asks, in the same vein as liquidity, how are these big institutions going to be able to buy 6 figures of DeFinity with such low liquidity when they really start buying? Yeah. Without completely pumping the price on themselves.
Yeah, no, absolutely. And that's one of the other reasons that I think we're going to, bringing in the small cap side and starting to get the smaller utility pieces working now to help drive up the price, and putting in more liquidity creates a more stable platform. So as these people come in, then the token already will have a bigger market cap, will have a deeper liquidity pool, will have more flow across. At the moment we're still in MEXC, and we're approached the whole time about, hey, can we, if you pay us X thousands or whatever, can we do this? We've always sort of held back. We have, One Trading is a long-term strategic partner. We have Facet, who is a regulated exchange in 6 or 7 jurisdictions, across Asia. Again, a strategic partner. So there are 2 immediate touch points where we could also, with the right liquidity, get onto those exchanges, because it's a strategic benefit. We're already working with them. We're already They are bringing value to our business, the token. We're bringing value to their business and the token. We're working in initiatives together that kind of grow out what we have as a proposition, and also where we can access some of their trading requirements. So we've already got a couple of other exchanges we've got lined up, but it's very much down to liquidity. So that is becoming increasingly high on our list. So the utility and liquidity are the two bits that we're sort of taking active steps in. But we'll always, being very open, we'll want to make sure that we kind of protect the core business first, rather than slow down any of the speed of growth by putting it too fast into other areas yet. But it's kind of there. I think that hopefully it's coming across a sort of excitement. The timing feels right, because with the utility and liquidity, we can build everything up. And there are a lot of discussions going on with that. And we're also very, very open to feedback. We'll take some of this in the chin as well. It hasn't been perfect. It's been a slightly bumpy ride, but we've also seen some of the people enter the space working with other banks who we know their revenues are behind ours. We've seen some big players come in, not understand the business fully, not understand how crypto works, and actually pull back out of the market. So there are one or two very heavily invested businesses that have come in, tried to play in this market, and actually pulled back out because they didn't fundamentally understand how crypto worked as an asset class, and they were just trying to apply old TradFi technology. Actually, Randy, there's a very interesting point you made a second ago, actually, about full disclosure and regulators. I mean, one of the other things we've always worked on, again, is keeping very much front and center with the regulators, and being part of that. So apart from Jersey, where the regulator and even the government are very proactive with us and very positive about the things we're doing, and we have a lot of consultations with them about what is going on in the development of digital assets in their jurisdiction. Long term, we've also been engaged since 22, I think, with the FCA and all the crypto outreaches that they've done. So their initial policy sprint, and then latterly the roundtables have been running, looking at the next iteration that's due to come out next year. And again, with the SEC and I guess the current upcoming change of administration, and will potentially accelerate that. So, we've spoken to the SEC at commissioner level. We've been engaged with their FinHub, and we've been very much sort of front and center in terms of addressing and educating and working with the regulators to make sure that what we bring to market is something that is acceptable and will be supported by the regulators, rather than bring something to market that ends up in a long and potentially legal debate with the regulators as to whether or not, which we've seen other crypto native sort of participants end up in. So we've always been forward looking at that approach. Most of us have been regulated for the majority of our professional lives, and it's kind of know your enemy sort of stuff.
I'm excited with where things are going. When people understand really what blockchain cryptographical encryption unlocks, it unlocks a technology shift. And these technology shifts are huge. If you think about some of the biggest companies in the world, like Facebook is a Web 2 company that didn't exist in 2000. So even when the internet went big, which was Web 1.0, Facebook didn't even exist. It's now one of the largest companies in the world. And these shifts create opportunities for companies that understand the shift to become giants. So a lot of what I think of crypto is early stage business investing in Web3 companies, and Web3 companies that right now might be small, but are onto something big that can become giants in the future, right? And so I love seeing things like, okay, they're solving real problems for real businesses and real people out there. So institutions that want to buy crypto, but they can't do it the way you and I, like normal people, buy crypto, where we might send some money to Coinbase, we might send some money to Binance or something else. They need to have it custodied by a bank for their regulations. And so it's solving those problems that we don't think about, you know, and then just other problems that have come up. High net worth gamblers like, well, shoot, I want to use Bitcoin to fund my gambling today. Oh, sorry, sir, we can't do that. And yet now they can, right? And that problem alone is going to be a big thing, because what's funny is a lot of high net worth people do have Bitcoin. A lot of gamblers are very heavily involved in Bitcoin. Yeah, Tammy, who was a good friend of Randy Chavez, she works in the gambling industry as a dealer, and she's like, all these professional gamblers all the time, they almost all have Bitcoin. And so in the gambling industry, like they understand and know Bitcoin, and a lot of them carry a lot of net worth in it. So this just solves real world problems, and fun to see what DeFinity's doing.
Some of the big winners potentially that, as you talk about kind of the Web3 space and what's happening, I mean, crypto it's transformational. You're absolutely right. But the other thing that nobody's really talking about yet, apart from one or two sort of think tanks and, you know, the BIS, so Bank for International Settlements, one or two big policy type groups are starting to look at it. But ultimately, banks, capital market banks, investment banks are creating on-chain assets from fixed income bonds. So like an asset class that's, you know, 100 times the size of the total market cap of crypto. And they're starting to issue bonds, fixed income, on blockchain. So actually, you know, crypto itself is almost a proof of concept for kind of Web3 and blockchain technology that can roll out across other asset classes. And one of the things we're very aware of is we're creating a secondary market trading venue, an independent regulated trading venue. There is nothing to say that in the future, you know, it has to be Bitcoin, Ethereum, Solana, whatever. There's nothing to say that other blockchain-based assets couldn't be traded across our platform, because it ticks the boxes for financial institutions to trade rather than being built for one specific asset. So again, you know, what we've tried to do is we've tried to create something that's future-proof and that can work with the expansion of blockchain and the transformation of financial markets as blockchain develops and evolves. And we're seeing it in all sorts of spaces. You know, people are tokenizing equities, government bonds are being fractionalized. We're seeing people talk about regulation of stable coins, you know, wholesale CBDC. It's coming from all sides. And it's really just a case of how these waves kind of land in the beach.
So on the side of the business, obviously doing exceedingly well, where even if you need the business to be successful for the token to be successful, you know, that's something that everyone can understand. But something that some of the people in Telegram are kind of worried about is kind of the opposite. Is, well, we've had a couple of disastrous days for the token across the year. Obviously, we've had some great days as well, where the token has gone down by like 50% or like 80% due to some things, and the business wasn't really affected. So a lot of the people's worries is that, hey, is there a big concern for the price of the token? Is there a big concern for the holders? Because to them, in Telegram, it doesn't seem like there is. Is there something that you could say to be like, hey, outside of the fact that the DeFinity team, or, you know, in the business development wallet, owns the majority of the tokens out there and are clearly incentivized to have it do well, is there anything else that you could say to not necessarily pacify them, but to say like, hey, don't worry, we have your backs?
Yeah. So, you know, one of the things we've always been very aware of is, as it sort of said at the beginning, because the token doesn't run the platform, there's kind of that degree of separation. So the one advantage, or an advantage of that, is that when the token has a disastrous day, because it doesn't torpedo the business, it doesn't stop the commercial business, then as long as we keep the commercial business moving in the right direction, then the ability to rebuild anything that happens in the token world is kind of more within our grasp. So it's not like we're seeing the commercial business and the token price crash at the same time, and then we're kind of in a world of pain and don't know how to get out of it. So some of the terrible days that have hurt, you know, and hurt us as much as, if not more than anybody else. We've always sort of had to stand back and say, okay, one of the things is, as long as we can keep the business growing and do the right thing and bring the utility on, then ultimately financial institutions aren't going to be buying this token initially because of the candle, because of the traction, because they believe in the business. They're buying it because they're using the business and they want to save money using the business. So to them, whether it's at 10 cents, at 50 cents, or at $1 is less relevant. They're taking a chunk of capital that they would be paying in trading fees, and they're putting that into buying a token so that they get discounted trading fees going forward. So for them, it's pure simple math. It's nothing to do with actually the token. So that's one of the things that hopefully kind of reassures people that these investors that are not investors, these users of the platform will be getting a discount to fees because they bought the token, rather than they're buying the token as an investment outright in the token itself. Now, we believe that over the fullness of time, they will see the operating model, they'll see the token, and then hedge funds, alternative asset managers will want to come in as an investment, but initially they'll just come along to save money. And they'll do that by using the token. So I get it. They'll be looking at it in a very different way from a retail community investor coming into it, who might be looking at TA, who might be obviously listening to you guys, might be listening to us, might be reading up on it. They're looking at it as an investment. These guys are actually going to buy it because they want to buy it so they don't have to pay out so much cash on their trading fees. So that's a very different driver. The other thing that hopefully people are starting to get a sense for is, a lot of the emerging market technology that happens, particularly in finance, are innovative people, and we see it a lot particularly in crypto. You see innovative projects come up with wonderful things. Financial institutions think, hey, this is great. We can now start to bring this into the big markets. What happens in many of these stories is the retail people, the small innovators who started the story, often get iced out of the rest of it. So they don't get the opportunity to come on the journey as the big global banks and financial institutions adopt new technologies. They kind of take the toys and go off to their own corner of the playground. Well, here, DEFX gives people the opportunity to come along on that institutionalization journey rather than get iced out by the big institutions. So even though the big institutions will be using the platform, the token will still be open to the retail community. So the more they use it, the more they continue to buy it, the more the retail investor can kind of get, I suppose, a vicarious journey on the institutionalization of crypto through the token, which otherwise they wouldn't be able to tap into. So again, that's one of the things we've always been very keen to do, is not sort of take all the toys away and give them to, the big global banks or hedge funds or asset managers. We've been very keen to make sure that actually what we're doing still has a touch with the early innovators, the early investors, the people who started the journey.
One more thing before I hand it back to Rain. Me and Rain, obviously, when you guys do some marketing, a lot of times you do it through us, and we've helped bring in a ton of money, which has been great for the sustainability of the token. One of the questions is, what plans in the near future are there to improve the crypto side of marketing and awareness?
Yeah, absolutely. So the fact that I'm afraid it's just my ugly face rather than Manu's, I won't tarnish him with the same brush, but rather than having Manu sort of sitting here in the chat as well, hopefully gives you an idea of the stretch of bandwidth at the moment. With everything, we're all working very hard at growing the business as fast as possible. I think and I suppose this is demonstrated, for people who've sort of been following a little bit on sort of LinkedIn or on the Telegram channel, may have seen that we got invited to the EY, Ernst & Young, like one of the big four global accountancy firms. We got invited to the recent cohort of their growth program. So not startup program, but their growth programs. This is for businesses going through the growth phase that all have positive revenues. Actually, the majority of the businesses have a multiple of the number of employees that we have. They've all received significant investment, etc. So, even one of the big four accountancy firms went over our business. We became one of their clients, so we kind of got their stamp of approval. We completed the program, and it was all focused on scale up rather than startup. So they have us in their growth fast track. We're working with their digital capital markets team, and they're introducing us to new financial institutions. So basically, all that is saying is we're now at the stage where, as a growth business, our ability to reinvest into the non-core parts of business is increasing. Our ability to actually start to increase the headcount, to start to invest in some of the other bits that, as a business that's trying to generate revenue, trying to create cash flows, trying to create positive cash flows, at that stage, you very, very much try and keep a lean, mean team and focus on your knitting. The idea is, how do we get this business to be sustainable? As the business becomes sustainable, you then start to have what will undoubtedly feel like a luxury, like a shameful luxury of investing in things such as kind of marketing and so on, where you can then put back into some of the bits that aren't the core operational piece of the business. And that's really the stage that we're going to be entering over the next kind of couple of quarters. When the Insti side goes live, the small cap side continues to grow, we will start to have the ability to invest on some of the non-core elements, such as marketing, such as reinvesting into the crypto marketing, raising the profile. So we're very, very aware of it, and we're kind of almost torn. It's like, you guys know Manu, you've spoken, had him in a number of AMAs. He loves getting the chance to come out and talk to people about what's going on. He's desperate to do it. It's one of his favorite things. He stays up sometimes till 3 a.m. so he can go on American cable channels to tell people about the business, about DeFinity, about DEFX, what's going on. So he loves it. So the fact that he isn't able to sort of join in for this hour today, hopefully gives you an idea of kind of how much we're focusing on growing it. But we're coming out of that stage of just having to focus on the day-to-day and just focus on growing the core business, and actually starting to look at how do we make now the business is sustainable financially, how do we roll out some of the kind of softer and broader areas of the business that we will need to go on to the next stage. Because you're absolutely right. Having the marketing functionality up and running, absolutely. Having bigger teams, absolutely. But again, you don't want to do these things until you know that you've got the day job right. Yeah, get over the first hurdle before you start worrying about the second and the third. So, and we're over the first hurdle. We've got the second lined up. So subsequent ones, we feel actually these are the bits that we can now start to address. So yeah, very, very positive. We're hopefully 25 will enable us to do, to do justice to spending more time with the community, to doing some of the softer things that we love doing and that kind of we started the project doing.
So if I were to summarize, focus number one is continue to grow the business, more clients, onboarding them, helping them get used to it, getting more clients there. Part two, bring in the repo part, which is the casino part where casinos can offer stuff. And there's a lot going on with that. So right now you're having a few test cases and getting all the data recorded and sending that off to the corresponding regulatory agencies, some test cases in the USA and other jurisdictions. And if that goes well, then you'd be able to open up into hundreds, if not thousands of casinos around the world to be able to offer this to their high net worth individuals. So that the conglomeration of those two things is eating up now a lot of your time. Now, December, there often isn't a lot of trading going on in traditional markets. Is a lot of trading going on right now in crypto?
Yeah. Anyone that's tried to find their banker anytime after Thanksgiving normally knows that December is kind of a bit of a fallow period. So listen, I think there's sort of a combination of two things. Trading's continued strongly, and we'd be very interested to see this. So, it was just over a year ago we started, so we were curious as a slightly more mature business, what do we see in the first kind of festive season, actually where we have a bigger run rate? So it feels month to date that people haven't shut up shop. So that's great. That is superb. That's a real strong testament to how buoyant the markets are, and how much the product is in demand. I think there will also be a slight element of the fact that, particularly for the on-off ramp, which has been one of our strong points, our background in TradFi and our understanding of crypto as well. One of the things that a lot of people have struggled with is, how do you get assets on chain so you can invest more actively on chain? And how can you realize some of those investments when you've reached your kind of optimum period? So a lot of people have struggled to find that institutional way to get on and off the chain in terms of value. And that's one of the things that we do. So I imagine a lot of people who are looking at the number of banking windows that are coming up where banks are shut, like Christmas Day, Boxing Day, etc. So there's probably a little bit of people bringing forward trades ahead of the bank holidays and the kind of very long weekends, and an element of the fact that it's a slightly different marketplace from normal wholesale markets. So people are still working, which we're delighted to see. Not everybody's gone to lunch like a lot of the bankers might have done. So I think it's great. We were always a little bit curious, but it's great to see how strong it's sort of been so far month to date, and every indication is that it will continue, which is obviously not great news for the team. So we won't be doing too much time around the Christmas malls, etc., over the course of the next week or two, because we want to make sure we're here for clients and we're here to continue the growth.
Awesome. Chris, I've appreciated your time. I feel like the audience, those that have never heard of DeFinity before, have at least a good idea of what it is. Although Gestures Ruin says I may need to listen to this 3 different times, because this is complicated, a lot to learn here. Yeah, true. First time Manu explained to me what was going on with DeFinity, I couldn't say I could wrap my mind around it, because it was solving problems that I didn't deal with on a day-to-day basis. The second time he explained it to me, I was like, oh, I get it. Okay, wow, I didn't know institutions had these challenges. But
so how can we wrap it up for people in maybe 60 seconds? So yeah, one of the things I had to do a couple of weeks ago was stand up in front of a room full of accounting partners and try and explain DeFinity in 60 seconds. Then the next day I had to go on a sort of VC panel on a fintech forum and try and do it in 3 minutes. So how to do it. So listen, we are an institutional venue that enables people, financial institutions, to trade crypto and digital assets in a way that they're allowed to from a regulatory and a fiduciary duty perspective. So that is what we've created. We're regulated and we have the technology sorted. We're a live business. So that is what we do as a functional business. What we have created on the way are 1 or 2 very unique products, such as the market maker, the anomaly detector, and I'll call it a product, but the crypto repo product, which has been used for gaming. So we have created parts of the ecosystem that helps the entire crypto wholesale large scale market grow. We're revenue positive, and yeah, really that's what the business does. In terms of the token, it very simply enables people to get a discount by using our services by holding the token, and we're talking financial institutions. So therefore, for the retail investors that are in the token, it gives them the opportunity to join that ride of institutionalization. There are a lot of nuances, but until as you said there, unless you understand a little bit what the problems are, then understanding the solution is another stage. But it's kind of simple. We're not a project, we're a business now. The token has a benefit to our customers, and therefore we've created a symbiotic tokenomics profile that the more the business grows and the more customers we have, the more they need to buy the token and want to buy the token from a simple mass point of view. So that's a simple tokenomics. Deflationary, but deflationary with a customer base that are defined and know what they're doing. That's somewhere between 60 seconds and 3 minutes, was it?
A good elevator pitch.
Yeah.
Enjoy it.
Randy,
Again,
do you
we
have any
appreciate
further
your time.
questions?
We know you guys are crazy busy. Do you have a couple minutes after just to talk off camera just a bit?
Yeah, certainly. Yeah. That's cool. But I mean, listen, thank you very much to everyone who sort of joined in. And thank you very much to you gentlemen for sort of giving us a little bit of airtime. I will, I'm sure as soon as we go offline, Manu will probably jump in and say, hey, I'm here.
He's like, I'm here, I'm ready for the show. It's like, oh shoot, we're no longer live.
We'll do another one.
All right. Thanks everyone.